Hi everyone, welcome back. We're looking at Ocwen Financial Corp today, ticker OCN, traded on the New York Stock Exchange. Basically, what I want to do is we'll go and look at their chart to start with. Basically, Ocwen is a third-party mortgage loan servicer. So basically, they handle the payments that come in on a monthly basis. They run all the accounting for that, and it's something that the larger banks don't want to do. Some of them do it in-house, but a lot of them opt to have someone outside handle that part of their business, and we'll see why here in a second. But they have some recent beats on the earnings, which is nice to see. That one pretty significant. They also had a reverse stock split just a week and a half ago. So if we look at their older chart, we'll see that 2011 it was trading at 170 $70. Jumped all the way up to where are we at here? $900 a share at the peak, 2013. So and then after 2013, as things started to kind of return to a new normal, their share price has really fallen. So basically, during normal times, their business isn't that complicated. I mean, they're basically just receiving the payments from people on their home loans or business loans. And I mean, putting that into an accounting system that's probably automated 90%, 95% anyways. But when they really make their money and when they are able to charge the higher premiums on their services is when you're dealing with a large number of foreclosures. And so, as a CFA candidate, they have a study a lot of things related to economics at every level of that exam, so at all three parts for that charter. And so this is the Case-Shiller Home Price Index, and it's inflation adjusted, and it uses the year 2000 as a base. So it's important to always have a better or a good understanding of the macroeconomic environment, what's going on. And so I wanted to look at this. We can see from 2000, there was a big run up in housing prices in many cities in the United States, with Miami being the top of the top. December of 2016. Then there was the big slide, the big correction in 2008, housing crisis, 2009, things continued to drop. And we saw a lot of cities have their housing prices actually drop below where they started in 2000. So we can see that from Minneapolis, Dallas, Chicago, Charlotte, Phoenix, Atlanta, Cleveland, Las Vegas, and also Detroit. Now, many of these cities actually never recovered from those 2000 highs, if you want to call them highs, but most did. And the point is that really the bottom was about in 2013, which is when we see Ocwen really making a lot of their money when they were servicing a lot of those foreclosures, a lot of those delinquencies. And it's not hard to find bad news, but it does make a lot of sense. If we go over here and we look at some of the largest mortgage originators in the United States, this is the top 10, and you can see them here, starting with Wells Fargo, Quicken Loans, JP Morgan, and the list goes on. But basically the idea is that these organizations have basically brokered deals with the federal government. And so when they originate these home loans, they're not like lending out JP Morgan Chase money or Quicken Loans money. They are basically loaning out federal dollars. But in order to get in on that action, they have to abide by certain stipulations and agree to certain terms. One of those terms is that the federal government kind of made a policy decision. They wanted to see higher home ownership. And I think from an economic growth perspective, that makes sense. You're going to have more purchases of like lawnmowers and all those goods, furniture, things that you buy, and the upkeep. Two, it keeps people a little bit more grounded and identifying with our community. Three, if people have a large amount of debt hanging over their head, I mean, they really don't have the opportunity to go into their boss and say, like, take this job and shove it. They pretty much have to like lock down and work hard. And I mean, that's, you could see from like a policy perspective, that would be good for the economy. On YouTube, there's a couple of channels I really like. One is the Money GPS, and the other is this one, the Silver Report Uncut. They cover just a lot of macroeconomic things. You can even see something coming in from the lira, the Turkish lira. So it's not only just the United States, but they did two recent videos. One was the high record rate of delinquencies on FHA mortgages. These are basically federal mortgages, federally backed mortgages to like low income or high risk borrowers. And the other one you can see here, 32% of Americans missed August housing payments. So in one of these articles, I don't remember which one, they mentioned what we've already knew, that a lot of the larger banks are really loading up on funding these accounts for loan loss provisions. They are expecting that people are not going to be able to make their payments. They're expecting a large number of foreclosures, delinquencies, and the like. And so being aware of that, what should we do? Well, if you go and you look at these folks, these are retail banks, right? They don't want the bad name or their name being dragged through the mud right? If they foreclose on a whole bunch of people, right? If you have a checking account, a savings account, or you're thinking about getting a credit card, you may not want to get a card through JP Morgan Chase, right? If they took your house 8 years ago. So you could see the big incentive for these loan originators to go ahead and sell the servicing side off to someone in case they go bad, especially since they know that the federal government is going to basically strong arm them into making loans to people who are very likely to default on those loans at some point, especially if you're talking about 30-year mortgages, if you're talking about people who aren't citizens, if you're talking about people who have more than one bankruptcy in the last 7 years or financial restructuring, if you have people with bad credit scores, if you have people with pretty unstable earnings or work histories, you can just imagine. There is a backstory with Ocwen, which isn't all that pretty. Basically, 0809, we saw that they made a lot of money. We saw that on their stock price and how much that increased. And that a lot of regulators at the state and federal level heard different claims coming from consumers saying, you know, Ocwen is really doing us wrong. They're treating us badly. We're being treated poorly here. And we want you guys to do something about it. And New York State kind of took the lead, and it says 22 state mortgage regulators filed enforcement orders intending to limit or freeze Ocwen's ability to acquire new mortgage loans to service in their states. Servicing a loan involves billing customers and funneling payments to the lender. Now, Ocwen, which is not a bank, specializes in doing so for subprime mortgages, home loans issued to people with less than stellar credit. And so, look, this company, I mean, it may kind of feel like that they are the garbage men, if you want to take it like that. I mean, it's like they're dealing with these bad situations, right? And maybe, I mean, who would want to get foreclosed on, right? Nobody. Now, did we have major problems? I mean, we knew the story with Countrywide and all the deals that were going on. If you saw some of the movies, the Inside Job was an interesting one. But, you know, just there was too many people getting loans before, right? They were trying to get anybody, you know, the ninja loans, right? I mean, no income loans or interest only loans. All these things were a problem. So, but a lot of the heat fell on Ocwen. And so you could see why, again, some of these larger banks, they might not want to have anything to do with all that hassle, all that mess, being sued, being in the newspaper. Now, my friend who works on the legal side of real estate law, you know, he was the one that initially told me about them. He said, you know, they're probably not everyone's favorite squeaky clean company. You know, they have to handle really difficult situations, and they're going to get a lot of complaints. Well, we saw those. We saw those from the States. We saw 580,000 customers have complained to Ocwen about errors in the last 2 years, according to the Consumer Bureau. So Consumer Bureau got involved. A lot of the governments got involved, took Ocwen to court, and they had settlements. One thing we see here later on in this article, this is a 2017 article. The article kind of ends like this. Recently, Ocwen seemed to be emerging from the regulatory cloud. Just last month, Maria Vullo, now New York's top financial regulator, modified the state's settlement with Ocwen, agreeing to remove the monitor and consider easing restrictions on Ocwen's ability to expand. California also lifted some restrictions on Ocwen this year. She goes on to say Ocwen has made progress in correcting these deficiencies, but still has more work to do. So, and just considering, are they going to have another big run up? Are they going to have another big boost in business, given some of the delinquencies that are quite certain to happen? Quickly, we'll give a glance at their income statement on an annual basis going back to 2015. Total revenues are declining. Operating expenses, total operating income is in the black, but after these other expenses, income before taxes, all in the red. Net income before extra items. If we jump over to the cash flow statement, as we know, negative net income, positive cash flow, although decreasing year over year. Yep. So as the economy has been doing, I guess, quote unquote, well, as interest rates have been decreasing, employment hit those kind of very high numbers in 2019. Well, now we're in a different story. So go and look at some of the ratios, but basically the idea is, you know, someone is going to handle all these foreclosures, like it or not. And I hope none of you guys are on the receiving end of that. Hopefully, you know, you can figure out a way to get around any of those types of problems. But somebody is going to handle this. You know, somebody is going to have to go in there and kind of do the dirty work that these big banks don't want to do. And the article said that Ocwen was one of the largest. Price per sales is 16 cents. A lot of these financials aren't really that great. I mean, they have negative earnings, so that's going to put a lot of these things like sales growth is 9% negative. 1 year earnings per share growth estimated to be 85%. So they did have that big earnings beat recently, but forecasted EPS growth looks to be negative. So it really depends, you can go and look further if they are still in that same position. But I thought it was an interesting company, at least to keep an eye on. So I did buy a small number of shares, and I should give that disclaimer. It's not a large position for me, and of course I'm not giving advice, but just bringing information about this company. Like I said, a lot of these earnings and profitability measures are going to be negative because of their net income. Cash per share, it's good. Book value per share, this is really interesting. So book value per share has it at $49.93 per share. But you can buy the stock on $19, between $19 and $20 this weekend. So, I mean, that's really, really interesting for you value investors or those of you who kind of follow Warren Buffett's style of investing, where you're looking for undervalued companies that you can pick up at a bargain. They have a lot of debt, long-term debt to capital, debt to equity. I mean, way above their peers. Return on assets, negative, and that's pretty much it. So, I mean, it's what you would expect from a company that has been operating in the red. But there's not a lot of analysts that are covering it. There's no one from Morningstar covering it that I see on here on the Schwab report. You have CFRA's opinion as a hold, Reuters a hold, Reuters. Market Edge, second opinion weekly, they have it as a buy. So, I mean, that's about it. The 1 year returns dropped 31%. Like I said, they just had the reverse stock split. They were trading at about $1.50. So these companies, they don't want to have their stock under $1. So they did the reverse split. And currently over the month, they're up 3%. So just something to keep your eye on. Could be interesting. Hope that helps.